Good morning, guys. Welcome
Good
to
morning.
Blockchain Banter. Good morning. Um, so we haven't been together for 2 weeks. I kind of want to dive right in. But first, thank you to all of the viewers for tuning in today. I'm Jen. I'm your host. I'm here with Keith Allen, TA and algo trader, order book analyst, and co-founder of Material Indicators, along with Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. Thank you guys for joining me. Keith, I know it's an hour later for you. Mark, I know you've been traveling, but we do appreciate you taking the time
I don't even know what
to
time zone we're in. We're just hovering.
I just go with UTC because I don't think that changes. I'm in Arizona. It doesn't change. I don't change. That's it.
We're just
But
hovering through time and space, and every once in a while, once a week, we collide.
well, it has been,
It's good. It
like I said,
works.
it works. I titled this one Bitcoin's Wild Ride because it has been, right? I mean, and I think from the reactions of everybody, they're not quite sure what to expect next and weren't really expecting this, but we had started talking about this a few weeks ago. Keep an eye on these levels. If it breaks through this, it's going to be going to this. And if it breaks through this, then it could very well reach this. I remember, I think 73 being in there. But I could be mistaken. I want to do a quick recap with you guys. What have we seen over the last 2 weeks, maybe even 3 weeks? What were these key levels? When did it really break through them? And, what are we looking at currently? I don't know if either of you are able to, or, even news, right? There's a lot going on right now at the moment. Maybe it's not even in the charts. Maybe that's kind of the after effect of some news that have been coming out. But
Oh
what are you
gosh,
guys
I
thinking?
haven't heard. What are you talking about?
You haven't seen anything on your news, huh? So what do you guys, what do you think? What are you making of all of this? We've been talking about how if it breaks through these levels, it's going to be doing this, but were you actually expecting to see it happen the way or, play out the way that it did?
Um, Mark, you want to take this first?
Here, you know what? He's sharing his screen, so let's bring it up. Go ahead.
Yeah, sure. Um, so yeah, I can't remember exactly what we discussed last time, but generally I do try to point out things like, divergences when they show up. And so like one of the things that was suspicious about, this rally here, is that on the RSI, it was losing strength as the price was rallying higher peak to peak. This is on the weekly chart, by the way. And so, this is generally an indication that there's going to be at least a pullback, if not a full trend reversal. And so we've seen this pullback. I think Keith and I have also been pointing out that during this whole period up here, that it really hadn't come back to test any of the the moving averages in some time. So for the faster moving averages, it kind of just crept up to touch them. And then we had sort of a sharp wick down, followed by a close the next week, pretty close to the 50 EMA and the 50 SMA.
Mark, are
And
you
so
able
these
to
were,
zoom in on that a little bit for us? I don't know if our
yeah,
viewers are going to really be able to see that very well. Awesome.
sure.
When you say a while, okay, now we have a better view. We're looking at November through March, or through what we're seeing in March so far, that it
Yeah, exactly.
hadn't
So
retested.
yeah,
Go
so
ahead.
yeah, so there was, when the market was kind of pricing in, the Trump victory, a more crypto lenient, financial sector in the United States, and also, things like, a strategic reserve and whatever, these kinds of things. And so that stuff I think was kind of baked into the price up at this level. And so it was definitely a very sort of sell and use event. Like I think that this week down was actually the strategic reserve day.
And I would add that a lot got baked in a very short amount of time.
Right, exactly. It was looking a bit overheated. We were way above even the 20 EMA and 20 SMA. And you'll note that, back here in sort of, the July to September of last year, on the weekly, we actually did come back to check the 50 EMA and the 50 SMA, twice, if not three times. before rallying higher. And so, I was kind of expecting it to come back in. So I think it was at least 3 weeks ago, back when we were still at sort of 95, where Keith and I were saying that, this 75, 74K level, which is just where the, 50 SMA and 50 EMA happen to be, probably represents an attractive, price point for things to come back and check. And you'll see that, these wicks, this wick didn't quite touch it. But then on this week's candle, we actually did get a wick down to exactly that level. It's 76,941-ish, at least according to Bitstamp. So not like, I would say that it's not too surprising. People are losing their minds, but it's really just kind of Bitcoin as normal, really. Remember I drew this trend line. This is that sort of zigzaggy sawtooth shape that we drew over the chart when we were discussing the 4-year cycle. And I had originally just drawn this trend line because it looked like sort of the best fit through the data that we had at the time. And you'll see that we've been below that trend line, plenty of times before. Way back here in
It's
August
a volatile
of 23.
asset.
It's a volatile asset, exactly. So I don't think that this is, this isn't really indicative of anything, in my opinion. But that's not to say, if we break support here, so checking support, I think is fine. And I would expect a rally back up to the upside from around about this point. That's not to say that we shouldn't expect a close.
So
or
you're
something
saying around the
a little
50
bit closer to
week,
this.
around the 50 week?
Yeah, exactly. Around the 50 week, I think is generally pretty good, at least with respect to the bull market that we've seen for Bitcoin this cycle. The 50 week looks like it generally holds a support. So I would consider that the support band. And if we break below that, it could, indicate sort of an early exit from the bull market, and we might enter into, the recession a little bit earlier. Certainly the stock market looks like it's collapsing pretty quickly, and Bitcoin tends to, to follow what's happening there. But there's also the chance that Bitcoin could decouple, and as the stock market continues to, to move back down, that Bitcoin will actually continue to rally up to its all-time highs. But yeah, overall, I'm saying that this is mostly business as usual. I think people's reaction to it is more pronouncedly negative because their expectations were more optimistic. But in terms of what the asset generally does, I don't see anything out of character here.
Okay. Keith, I'm going to bring your chart up, or your screen up here. Let's see. Let's see what you're looking at, if you agree with what Mark is saying. And I have a couple questions for you guys after as well.
I do agree. Really with what Mark is saying. I just maybe have some different perspectives and draw things a little bit differently. But in my opinion, we're where we've kind of expected to be. And what made things, I guess, apparent to me that we were going to maybe exploit the trend line is this CME gap. And I'm not really a gap trader, but enough people are that it seems to matter. And so we had this CME gap that we came down and almost filled. This was on the monthly close in February, on February 28th. Price came almost to the trend line, almost to fill the gap, and it just left this sliver. And it seemed to me, if price is going to go that low, why wouldn't it go all the way and close the gap? Well, this, of course, comes close enough to the trend line and the gap that people go, okay, we're going to rally back and buy in. And it proved to be a dead cat bounce, right? It proved to be a fake out. There was some news here of, this was, Eric Trump and Donald Trump doing their a re-announcement of something. And of course, a full retrace there. And we did eventually come in and retest that trend line support and fill that gap, and then some yesterday. So we came right down to this 76K level, which we had also marked before yesterday on Bitstamp. 76.6 even is where we landed. And this has pretty close confluence to This area of interest that I have noted on the chart, remember on the way up, we were looking for areas of consolidation, and we had just a very brief amount here. And this also happens to coincide with that 50-week moving average that Mark mentioned. So I do see a strong possibility, especially based on today's news. And for anybody not tuned into what today's news is, we have another tariff flex between Trump and Canada on Canadian steel. He's essentially trying to, this is, pardon the term, Jen, but this is a big dick contest. And, and we know who is the bigger dick. And at this point, it is, I mean, he's relentless. He's not going to back down. And it's either, today's tariffs are a retaliation against Canada's previous retaliation that they were going to put 25% tariff on energy coming into the states that they support here in the U.S. I believe they provide energy for like New York and Michigan and maybe another state up in that region of the country. Maybe more, I don't know. But so this isn't something that affects the entire nation, but it does affect a big portion of the nation. What does affect the entire nation is additional tariffs on steel and cars and car parts coming from Canada. That's huge. And so in his last announcement on, his social media platform, he said, we're either going to get to the point where we shut down Canadian automaking altogether and we bring those factories to the US, or Canada becomes our 51st state and they don't have to deal with any tariffs because they're one of us. Well, I really have a hard time believing that Canada becomes the 51st state. But he is driving a hard game to do this. But it's clear to me that these are negotiating tactics, right? Some of these tariffs may be in place for a longer period of time, but this is clearly the way he likes to negotiate. And so short-term pain for long-term outcomes. Okay. The market hates the uncertainty. And that's something that's very different with this president versus prior administrations, right? Prior administrations have been very sensitive to the economy, and not saying that
You paused. Is it just me, Mark?
No,
Okay,
you paused
for a second. You were saying the previous administration was very sensitive to the economy. Not that this administration isn't, but
right. Not that this administration isn't, but he is willing to,
short-term pain for long-term gain.
I heard somebody say today, he's making an omelet and he's got to break some eggs to do it. And so you hear all the recession talk from the talking heads and the so-called, experts and opinion leaders, but there's not really, most of that I think is speculative. Fed Chair Powell last week said nothing we've seen in the recent data is indicating a recession. The unemployment blip is not a cause for recessionary concerns, and we're going to stay the course. And so we know that Trump wants badly for rates to come down. He wants the Fed to cut rates. We also know that the Fed does not answer to the president, never has, and wants to operate and wants to continue to operate autonomously. Well, what Trump is doing is basically triggering all the mechanisms that are going to force the Fed into a position to where it's time to cut. Is that going to happen by the FOMC meeting next week? No, not likely. But we have, I think, a May and a June meeting that the odds of a rate cut are increasing. So
do you see? Oh, excuse me. Go ahead.
So I think the market will, when they hear that, and maybe we hear Powell telegraph something towards that in this upcoming meeting that gives them some comfort. But sure, everybody is uneasy, and watching your retirement or your 401k or your portfolio, whatever, draw down is an uncomfortable feeling. But a lot of these levels just look like really good opportunities to me. Now, is it dangerous to catch a falling knife? Yes, it is. That said, did I buy in this zone? Yes, I did. Do I still have dry powder in case we go down to here? Yes, I do. And so
When you say here, you're talking about where?
I'm
What
talking
was
about that
69,
69K,
70? That's 69, yeah.
69, 70K range. And you could build an argument for really
It was the
anything.
level we were looking at for quite some time now. Even on the run up, that was kind of that resistance level, right?
Sure. And you could build an argument really for anywhere in this kind of range where price, flirted with through that time. But to me, there's so much significance on that 69 because of the fact that it was the 2021 top. We spent 8 months flirting with that range until we actually RS flipped it, and the actual RS flip came on election day. And so this would be a poetic, complete retrace of the Trump pump to take it back down to this level. I think Arthur Hayes put out an article a few weeks ago, predicting that 70K would be touched, and it might stop there. Certainly could, but I think the argument is for anywhere in this range, right? I think that this 75, 76K level is interesting for a number of reasons, especially because of the 50-week moving average that Mark mentioned, but also because, if you remember, I have shared a level with you guys before that I watch, and it's kind of like an unknown or little known little secret here, and that's this level on the weekly RSI. So that sits, I've got it on my chart, mid 41s on the weekly RSI. And if you look at history at all the times that price has encroached that level or broken that level, I should say, we've moved into bear market territory. And so, flirting with it gives you consolidations and opportunities. Breaking it is pretty much a sign that it's over, right? We broke it here, and that was the last flush, right, down to the 200-week. And then, so if you're looking at this level as a potential, a signal, it is, but you wouldn't want to buy when price breaks through it. You would want to buy when price is breaking back above it. That's not going to be your best entry, but it's going to be your confirmation that.
Why is that? Why would you say that you should buy on the way back up, not on the way down?
Because
Generally,
on the way down,
up.
you don't know how far down you could go. But on the way up, right now, you could find some technical levels that you might want to focus on, and that's okay. But if you're conservative and you want the confirmation that price is indeed going to recover, then on the way up, right? You see right here where we break out, that's your confirmed breakout trade. So this would be considered a more conservative, safer trade. You're not getting all the meat. You're not getting it to the bone, but you're certainly getting enough meat on that trade to and we can look at that time and time again, right? Here was the COVID crash, right? So we broke it here, but it was actually, we went a lot further. And so a quick recovery on that one, by the way, and off to the races. Let's look at it again. Flirted with it briefly here. When you have these quick recoveries, you look for these consolidations to happen. You want things to go up, but they could ultimately break down. It's kind of like that last opportunity to cash out. And so something else that I'm paying close attention to is this mid-cycle top we had back in 2021.
What's that level there? 60? Is that
yeah?
the
Well, I'm not necessarily
level?
looking at that price level, but I'm looking at the formation of this structure and how similarly this looks. Right? I think I have it marked on this chart. How similar that looks to what we are seeing now, right? This could very well develop, right? This could develop right into this same thing, right? And it kind of looks like it is. We came down to the 50-week moving average on this, consolidated briefly, little double bottom, and off we went to an all-time high. And we could very easily create that same scenario here. So that's something I'm certainly watching for. And this level would coincide, it would correlate with that weekly RSI that I just showed you. If we went down to that mid 75, 76 range, slightly lower than we already went, but you see we have kind of like double bottoms forming here on the RSI, maybe even triple bottom on the RSI right here. The fact that we've seen this RSI at least come out of the nosedive that it was on, and it's starting to revert here. It could certainly tick back down, and today's news could be a reason to do that. But I want to see a bounce from here. And whether that bounce comes from here or comes from here, I don't care, as long as we don't plummet through. And if we do wick through this, as long as the weekly close happens above it, I'm optimistic that we recover, faster. If the weekly close doesn't happen above that, then we may have some bigger issues here. But I really think that the market is in a healthy position. Believe it or not, nobody likes to see the blood in the water, except for those of us who are looking for opportunities.
Mm-hmm.
And I think those opportunities are all around us. I think if you're trying to play this super, super close, you're at risk of getting stopped out a lot. If you want to play,
let's play this, Keith.
Okay.
So, and Mark, both of you, because Keith, you're more centralized exchange trading, right?
Mhm.
Mark, you're more decentralized exchange. So let's play this scenario out. If I'm a trader and I'm not watching the charts, all the time, and I don't see this RSI flip, and I don't, might not necessarily be catching all of the news, but I have these key levels in mind that we're discussing, right? If it breaks through this, you were saying earlier, you did buy here, you've got some dry powder for this area, right?
Mm-hmm.
Now, Mark, last week you and I spoke about scaling and how it's kind of like laddering orders for centralized exchange traders. So how would we ideally, and obviously not financial advice, we'll throw our disclaimer out there, of course, but if I'm somebody who wants this key takeaway from what it is we're going over, I would ideally want to set some orders up, kind of scaling out of my position or laddering, from what, like 71 down to 69-ish, something along those lines. Is that I can't quite see this sort of range that you've highlighted price-wise, but we've spoken about the 70.
Yeah, I mean,
69, 70 area.
this, and listen, we may not even make it here. So this is really contingent on breaking below this mid 75K level. So if we do break this level, this could very well hold. It's holding right now. This could very well hold, and that would be healthy. We could flush this. And again, I don't like that we've broken the structure so hard, so aggressively, but staying above that 50-week moving average still works for me. If we break down into this territory, we have to recover very quickly. So, I mean, in terms of ranges, I don't know how you would set this up, Mark. Would you trade this right now still kind of using your 50-week moving average as your buy zone, or would you extend all the way down to this 69K level?
I might even extend a bit farther. Jen, if you bring up my charts again, there's something I'd like to show you. So, Keith, have you seen the comparison to the QQQ?
Show me.
So Bitcoin's ETF was launched in January of 2024, right?
Right.
So let's take it from here. And I'm just going to count out something like 50, 54, or 55 bars. I can't remember. And so you can see that like over that time period, we actually did get, a fairly decent I'll do it the other way around. So there's Monday, the 8th of January. Up to here is exactly 54 bars. That kind of marks the exact top of the Bitcoin rally. And if you have a look at this very specific chart pattern that's kind of been playing out here. So notice that we have a very pronounced hammer candle. So this is where you've got a small red candle body and a very long wick down. And then
a doji hammer.
A doji hammer, thank you. And then following that, we've got an almost engulfing red candle. It's not quite engulfing, but it's pretty close. Now, usually after a doji hammer, if you see an engulfing green candle, it suggests that we're going to see bullish continuation. And an engulfing red candle is generally a reversal pattern, not necessarily meaning the beginning of a bear market, but certainly maybe a slightly longer bear trend. So remember, that's 54 weeks from the launch of the Bitcoin ETF, followed by this pattern. I'm going to switch over now to the QQQ. Good, you can see that. And here we've got, so this is the QQQ, I think is the NASDAQ 100 index trust. And if I count out 54 bars, that was exactly to the top. And you'll see that it has exactly that same, that kind of same pattern. So 54 weeks of ETF, followed by, there's the doji hammer, and there's the engulfing red. Now, this one is actually a lot more engulfing. Remember, the Bitcoin one didn't quite engulf all of the doji hammer, so this is slightly worse. But look at what happened to the QQQ after that, right? This was, an 82% downtrend over several years, right? So this is, how many weeks is that? Yeah,
Mark,
so
you moved your screen around a little bit. Okay, so the left of where you are showing us in this box that you've created now, this is where you originally showed that doji hammer and the engulfing red candle, right?
Yeah, exactly.
You moved the screen a little bit, so I lost track of it. I want to make sure that we're all... Go ahead.
Sure. But yeah, it's interesting. And so I've seen this a couple of times. Ben Cohen has spoken about it a few times. But yeah, it could be, and there are a couple of other ETFs that show the same pattern, and they're often around about a year and 2 weeks, right? So 54 weeks. And when we were talking about Bitcoin ETFs in the over the last couple of years, I did say that typically ETFs are very bearish, right, in the long term. And here's just a spectacular example of it. And so it could be that we're actually at this period now for Bitcoin.
All right, and then just show us how the rest of that chart plays out.
The Bitcoin ETF started in January of 2024, and so there's your 54 weeks to the top. And
you're cutting out a little bit, Mark.
Here,
wait, Mark,
so,
we lost you for a minute. We heard 50.
That plays
Mark, we lost
Mark. The same way, which I'm not necessarily saying it.
Mark, can you hear me? Maybe there's a little delay. We lost you at 54 weeks top.
Sorry.
We haven't heard anything since then.
Yeah, so okay, got it. So yeah, just remember that, what I was saying, right, is that the Bitcoin ETF launched in January of, in January of 24. It was 54 weeks to the top. And if it plays out like it did on the QQQ, then we're expecting something like an 80% drawdown over 130 weeks, right? Which will take us all the way out to, to here down at 19K, which is interesting, that's a terrifying thing to be trading into if you're expecting, a quick recovery and actually that we will return to all-time highs. But we don't know that, right? We spoke about the 4-year cycle and that if things play out the way that they have. Well, yeah, sure, exactly. But we don't have too many examples. Even for the 4-year cycle, you only have 2 or 3 other cycles to compare.
I remember you saying this.
We really don't know what's going to happen. Not enough data points. But we do know
how long is the QQQ
generally destroy the stock market.
When was the QQQ?
QQQ has been around for quite a while. Let me see. So QQQ began in March of '99.
Okay.
So this was the .com. This is right at the end of the .com bubble.
Right. And so this is an interesting, interesting phenomenon that you're pointing out. There's also a lot of dissimilarities between these two ETFs.
Oh yeah,
I mean, just on how
it's
the Bitcoin
very
ETF grew so quickly.
very cherry picked. Yeah,
Um,
very 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 cherry picked. Meaning to say that trading taking a position right now to say that trying to pick up a falling knife to the downside here. I actually do think that it's a reasonable a reasonable assertion to say that we actually will probably close somewhere around the 50 week. And so there's still about 6% down. So if I was going to layer orders, I would probably start at exactly where the market price is now in case we do get a quick recovery to the upside. But I would be layering orders, down about, what's that, 7%. And then I would probably keep some in the back just in case we need to come back and check, the 100 or even the 200. And the 200 is only down at 48. That's not too bad. We've
you're
been discussing
bypassing the 75,
Bitcoin price action
76.
since way before then.
You're
If we
bypassing
lose
the
75,
76,
76, I think, if we lose the 75, 76, I think that we're probably in a full-blown bear market. I don't think that we're going to lose those price targets. I'm just saying that if we're going to lose them, I think the chances of us, losing all of this technical support down here in a hurry is slim. And I think that we can at least see bounces here, even if it's going to be a dead cat bounce. But yeah, I think that the jury is still out. I think there's a very, very good likelihood that we'll see Bitcoin. Like I said, I think that we will close a little bit closer to 76 than 80. And that we're, my expectation is that it will recover from there and go on to make, to at least break 100K again, and maybe move to an all-time high from there, or turn around and make a double top.
You're talking about potentially a few months, though, Mark. You're not talking about within the next week, right? If you're saying that if you were going to be trading this,
talking about.
Right, I'm talking about now. I'm saying if somebody wants to trade this,
but I don't.
I'm sorry. I think there might be a delay, Mark. You don't. No. That's okay. I just think there might be a delay. You don't recommend that somebody trades this right now, and if you were to create orders, then you would start creating it where the market price is currently, because if it breaks that 75, 76 range, you think that it's full-blown bear market, but you don't think that's going to happen. And my question to you guys is, we were talking earlier about the tariff wars and things of that sort, right? Like, we were talking about June potentially. So you think that from now until June, this area of unknown is we're gonna hold that 75, 76 and not break through that?
I think it's very difficult to pinpoint dates when we have an administration who is got no problem throwing statements out and policies that can have such a drastic impact on the market.
It's hard in general to throw dates out, right?
But it's interesting to me, we got this news, I don't know, an hour or two ago about the, additional tariffs coming on to Canada starting tomorrow. And the market obviously reacted to that. But now
we're back up. We're on our way back up.
Right. But now we're off session lows. Both TradFi and crypto are off session lows. And so maybe now the market is starting to realize this is how the guy plays the game, right? He is not going to ultimately destroy the stock market. He's going to maybe shake some things out and certainly shake some things up. And there's certainly a lot of equities that are way, way, way overvalued. I mean, look at what's happening to Tesla. But ultimately, the long game is to have a strong economy and a strong market. But he wants to get his damn rate cuts first, and he's going to do whatever he's got to do to get them. And he's also going to do whatever he's got to do to get into a fair trade relationship with countries that have been imposing tariffs on us. So more pain potentially in the short to midterm until things correct themselves. And I would say, and this maybe counters a little bit of what you were saying a minute ago about don't trade right now. If you're a trader, you love this volatility. If you're a trader, these levels are here for you to play, but you better get out. You better not be greedy, right? You want to take your profits quickly, and be very careful with that leverage. If you are a longer term investor, there's some interesting levels that may have your attention, and if you think that that's a fair market value, then dollar cost average your way into your position. I picked up some positions here. I've bought and sold over the past week or two, and not every one of those entries is in the green. Certainly not. But I've grown my overall long-term Bitcoin position, and my average entry is still in 50K territory. So as long as we don't go below 50K, I'm okay. And if we and obviously if we broke through this 69K level, I would probably close some stuff out, because I would agree with Mark. If we're going down that path, then that is likely. If we got a weekly close below 69, I would say that scenario that Mark talked about with a longer term 100 and some odd week downtrend could potentially play out. I don't think that's what's going to happen, but that's what I would be. That's what I would be watching. And of course, I'm always watching the liquidity to see where things are moving, and watching the order flow to see who's buying. And
what is going on there?
Well, the good news is that the money supply is increasing. And this has generally been a very strong catalyst for parabolic Bitcoin moves. So it's very the market is extremely polarized right now. Like all of the things that you would usually expect to lead up to a massive Bitcoin rally are there, but then all of the things that usually result in a catastrophic recession are also there. And so you've got very, very strong bears and bulls on both sides, and they're both credible.
They are both credible, and there's a lot of speculation on both sides, right? That's part of this game. The one
Do you
thing,
set orders on both sides then? Oh, go ahead, Keith.
I said the things that don't lie, the things that we're not speculating on, right? The technicals and the charts that we've shared with you. Mark pointed out the 50-week moving average and that range, and there's correlation there with the weekly RSI that I shared with you. And the other thing is the order book. And if you'll pop up that chart, Jen, you always ask me if we're seeing manipulation in the order book. Tell me what you see what you think when you see this.
Price suppression.
Exactly, and heavy price suppression, and choreographed price suppression. But look what just and this happened since we started this show. This block has just moved up, which means maybe they're, that could certainly be a trap, could certainly be trying to lure people in.
Let it breathe a little bit.
Let it breathe a little bit, and let's see if we can get some price appreciation, because we've had we've had a decent ladder of bid liquidity down here below, but this concentration here is now what, 84 million. Every time we do something like this and we go, oh, look, there's 84 million right there, people go, that's not a lot of money. It may not sound like a lot, but it is not typical to see that much at one level on one exchange, right? We can see hundreds of millions distributed through a range, but to see that much in one spot is not something we see all the time. And if we look at higher time frames, if I refresh my screen, we could look at higher time frames. If we look at higher time frames, we can see all the times in history that we've had, heavy concentrations like that influence price. So this clearly pushed price down, and you can even see when it moved up briefly, price popped back up briefly, and then they started suppressing it again and again and again.
That's what we're
And
seeing now. You said that appeared since we started the call.
well,
I mean, it wasn't
this started on Sunday. This
right.
the
This
white
recent.
block that just moved up happened since we started the call.
And it's not that it's gone up a crazy amount, but it's gone from like 77 to 81,000 since we started the call. We are seeing, since that news came out and since we started the call, a little bit of that breathing room kind of,
Right.
showing through on the chart here.
The news probably came out somewhere around here when things started going down, and then we seem to have at least coming off of those lows at this point. So it's going to be interesting to see how this develops from here. I think that the charts are. Oh, I was going to show you some longer term stuff. There's not a lot of spots where we see huge concentrations of liquidity. This is a massive one, 291 million. That's a lot. This was 185 million. So when you see these larger areas, this was a bounce right here from 85 million. So when you see these larger areas of concentrated liquidity, those are good cues, good things to watch as potential support or resistance, depending on whether they're above or below price line there. But I think that we could see, as Mark indicated, more testing down in this range, more ranging down here before we actually have a real rally back to all-time high, back to all-time high territory. And I think it is largely going to be based on the level of comfort the market has with what's happening, right? Once they start getting some reassurances, if they get some reassurances from Fed Chair Powell on his upcoming FOMC meeting, I think that's on the 18th or 19th, and get some reassurances from maybe the administration, that would help. Treasury Secretary has been pretty vocal about the fact that they are prepared to create some pain. They're prepared for some pain before they get to the sweet spot, and they're trying to break things down. They're trying to force this rate cut. So they're going to get it one way or another. It's just a matter of how long does it take to get there, and once that happens, how quickly will the market recover? I mean, if they turn on QE, I think it's pretty safe to say that the market's going to rise very, very quickly. I don't think we're there just yet. I think we've got a little bit more time ahead of us where we could see price maybe continue in a slight downtrend or consolidate again, similarly to what we saw coming off of the 2021 mid-cycle top. I could see a scenario like this where we grind for a little while and then find our recovery to a new all-time high. I still do not think that that the top is in for this market. I think that we have some behavior that is coming out of the
administration,
executive branch of the government that is creating some drama and some uncertainty and fear in the market. But ultimately, I think we're going to be okay.
You think those whales that are, placing their liquidity and things, that you think they're feeling that fear, or you think they're just playing whale games?
Gaming it.
Yeah. So we can look at the charts and things really all we want. We can look at these levels and things, but that order book where that liquidity is placed, I mean, that is really a key indicator of what.
Well, it's an indicator of where we're going, and where we're going to run into resistance and where we're going to find support, right? Unless it,
Keith, can you do me a favor and can you throw up the Ethereum order book? Because I think this is fireworks right now.
Okay, so Keith, We've been doing this for a while, but I know we get new viewers and things. We are looking at material indicators dashboard here with the fire charts. As you're, showing us this, give us a little bit of what, we're looking at if anybody is new to this, since we're talking about going
Okay,
from the Bitcoin
sure.
chart to the Ethereum chart, if you wouldn't mind.
Okay, this is, as Jen mentioned, this is fire charts is a thermal map of the order book. This is limit orders resting on the order book. A lot of times when you see heat maps, they're liquidation maps. This is not a liquidation map. This is a liquidity map of resting orders on the order book. What we see above the price line is sell orders or asks. What we see below the price line is bids or buy orders, and they are scaled relative to the largest block of liquidity anywhere on the chart in any given time frame. So this scaling will change asset to asset, time frame to time frame. Here we can see we have a white block right here that is 14.7 million, and you can see we're white up here at, in that range. So and if we hover over it, we can see what's at every single level here. So we're coming through a $9 million block of liquidity overhead that's price is trying to cut through right now. We have down at the bottom here, this is our binned CVD, which basically bins order flow by order size or order class. The blue is the sum of all order classes, right? So that's true CVD right there. But we can learn a lot by isolating different order classes to see, for example, what whales might be doing. And those brown mega whales have been selling over the past 24 hours. Purple has started to buy back in here. And different order classes have more influence on different coins, right? Some coins don't have much. Well, most coins don't have much mega whale activity to begin with because in terms of market orders, there's slippage to deal with, right? You can't place a $10 million market order when you have a void, a spot right here where just, if we cleared this and you've got $1.3 million in ask liquidity sitting right here, if they made a $10 million order, it would shoot up 1.3, 2.5, 3. I mean, it would go up to, 2K. So nobody wants to do that. That's why they make smaller orders. And that's why sometimes we'll see even the smallest order classes doing high volume. When you see a lot of drama and contour in like that yellow class, for example, it is often retail. When you see it pretty smoothed out, and on kind of a pretty smooth trajectory, a lot of times we'll see T-whopping happen, and that would be when institutions or well-controlled bots are doing a T-whop, which is a time-weighted average price, right? Incrementally, they're placing the same size order every few seconds or every few minutes, however their whatever their strategy is. So, we can see that once we clear this, the next big resistance is back at 2K. Meanwhile, there's not a lot holding things up above this 1800 level.
Yeah, it's and like technically ETH has like nothing under it until about 1500.
Yeah, I would.
And it's recently just
concur.
lost the wedge, the bottom of the wedge. Yeah,
I would concur.
I think
there's not much in the chart.
Ethereum's going to be in free fall for a while, I think.
Well, that might be where it deserves to be. I really shouldn't. I really shouldn't say that because I have some ETH and it's. I
was going to say you have it staked. You told us this.
And it's underwater. But I think that at this point, it's ugly. But I think that eventually it's going to recover. So I could either take a loss on it or I could just hold it long enough that I don't have a big capital gains expense on it when it's all said and done. Hopefully it recovers, and then we'll see where we go. We'll see where we go from there. I think there's still.
Well, hey, if you're looking to improve your dollar cost average.
Oh, absolutely.
right? I mean, now might not be the time because, like we said, it might be in free fall for a little bit, but it is an opportunity for the Ethereum lovers, right?
Yeah. Well, 1500 has been has been a pretty strong level here. This is really where the last consolidation was. And so
Exactly.
I would look at this, but I'm not catching any knives on ETH. I'm looking to wait and see when buying really returns with volume. And so maybe it's 1500, maybe it's down here closer to the 2018 top. We'll see.
I'm just looking at all those loans that are out, and if there's this, it's $122 million, and this is their liquidation price, and someone just added $40 million in DAI to, there's a lot happening.
Was
on
there
the
any
Ethereum
question?
end
Was
right
there any
now.
question that this was the top though?
Well,
At
I mean, I
4K?
think a lot of people started saying that was the top when we started seeing everybody say buy the dip. Maybe a few political figures or celebrities that were coming in and buy the Ethereum dip. I think a lot of people called that the local top, at least.
Right.
But
Yeah, that was even more recent. I think that was just a week or two ago.
Yeah.
So yeah, listen, these guys are going to move the market every week because they have the ability to do so and they know how to play the game. But in the end, do you think that the first family is going to make money or lose money in this market?
I don't expect them to lose money in this market.
Exactly, because they're going to do whatever it takes to make sure that they don't. And that means putting out if that means putting out timely statements to their benefit, they have no problem doing that. Everybody's on board.
I remember you saying something, Keith, and it was one of our first calls. It was something about how you aren't a whale, but you can swim with the fish, or I'm terrible at this. I'm the worst at this. But it was something along those lines, right? And I might not remember it word for word, but I remember the idea, the general concept, what you were trying to get through to our viewers.
The idea,
right?
the idea was very simple. You may not be a whale. I'm certainly not, but you can learn to swim with them by watching their liquidity moves and watching where things are moving. And right now, I'm watching things open up a little bit for price to move up a little bit. Do I think that this is going to lead to an all-time high? No, I do not. Do I think that it might lead to an opportunity to maybe take some profits or scale out of some trades? If you're worried we're going to go back down to the 75s or potentially lower, that opportunity may be presenting itself to you. And I will watch the whales to see what they do. Right? If they keep buying, if we get up here and they keep buying, then I'm not going to sell. But if we get up here or up here and they dump, there's my cue.
Yeah. Well, I think there's also still a lot more confidence in Bitcoin. We're talking about Ethereum than there is in Ethereum right now. And I think that goes a long way also,
Sure.
the sentiment and the actual confidence in what we're seeing. And I think it's been rough for quite a few holders right now.
Well,
Anyway,
money is definitely rotated into Bitcoin and of course into safety and in USDT. I mean, look at what's happening here on this chart.
That's right. Mark, I know you have a hard stop in 2 minutes. If you need to drop, I completely understand. But I think this is a nice way to close out the call, is actually seeing where that money has rotated to. And if you need to, like I said, I'm going to thank you now for joining us.
Thank you.
Yeah, of course. Okay, Keith, let's close it out with what your newest chart.
Yeah, so this is the Bitcoin price is the candles. Bitcoin dominance is the orange line, which is now just made it back above its kind of RS flip zone. Still is strong, almost 62%.
I was seeing 60 is that number we wanted to keep an eye on for Bitcoin dominance.
It at least in the past, since November, when all the alts started rallying, right? Bitcoin dominance dumped on election day, right? Here was election day, and total 3. That's the purple line. That is all. That's total crypto market cap minus Bitcoin and ETH. So this is where everything went, and and USDT suffered because people were rotating into alts and into Bitcoin. And now we see, we chopped here for a while, and now USDT dominance has been on the rise since early February, and just within the past hour or so has started to roll back down a little bit. This is an ongoing game, and we could see this go much higher. And so that's something we'll be watching for. But notice, as USDT dominance increases, the Bitcoin dominance hasn't really taken the hit that it used to take back in the day. Years ago, they were just rotating. The market was rotating out of everything into USDT. Now it's really rotating it. People are rotating out of alts, and that's very, very evident here. But it's a split between USDT and Bitcoin, and there's still plenty of money going into Bitcoin.
Yeah. Well, thank you so much for sharing all of this with us. It's all super. I always say, like, it's about the tools, right? And actually knowing where to look outside of your feed on X and crypto Twitter, right? So thank you so much for going through this with us.
Thanks
I did share the links. Of course, I shared the links to all of our viewers. Give Keith, and I know Mark had to drop, but give the guys a follow. I shared their personal handles for X along with the material indicators and Bancor and mine down there as well. We do this every Tuesday, 3 p.m. UTC, which is now, Keith, 11 a.m. Eastern Standard, right?
Yes.
So we will see you next Tuesday. Thank you so much.
All right. Thank you. Trade safe, everybody.
Bye, guys. Thank you.
Bye.